All right. Welcome to Mind Over Matter, the psychology of trading. It's where D Cruz and I and Cedar hang out and talk about the head game, which is easily, I would attribute 80% of success as a trader to the psychology. So, yes, you got to learn TA. You have to figure out what your edge is. Give me just a sec. I gotta decline this call.
Yeah, no worries. Yeah, TAs definitely is a easy part of it. So, the psychology is, when to take a trade, when to exit, where to set your stop loss and how to actually execute it. And when it comes down to it, actually buying it, right? And trusting yourself, that's the hard part of trading. We
Exactly.
could all chart, support demand, or supply and demand, basic support resistance levels, draw flags, but it's really just how to read the market and how to trade it.
And it really, yeah, TA should be relatively simple, volume based. I see so many people that
Yeah.
have, and while my execution chart looks crazy, it's so that people can see what I'm looking at, how I arrived at those instead of just saying, oh, that was the level that I needed to take profit at. It was volume based. But I see so many people with, 30 indicators on, and you literally can't see price action. They don't ever go to something like I use with a white candle chart where it's just overwhelmed by data that you miss the forest for the trees. You're literally like, okay, I don't know what to look at. Or there'll be three different versions of an oscillator. So, like the only oscillator that I use is the VMC, the Fu Manchu, that I have in Trading Tools. And I switched from that. I've actually used MACD since 2002 until I found this. And I watched them side by side for 6 months, possibly longer. It was a really long time. Because, when you've used a tool successfully for that long, kind of hard to switch off. But it pretty quickly became apparent that I was getting my confirmation signals on what I was already charting. So I don't use an oscillator for an entry or an exit signal, I use it as confirmation. Very quickly became clear that it was giving me the heads up or the thumbs up or whatever confirmation, a full bar before MACD. So there are always going to be things that you tweak in trading. You want to make sure that you're testing it. But then at a certain point, really what you're struggling against is you've either got too much information on your chart or you're not looking in a big enough range. So not looking left. You're focused on, hyper focused on 5-minute candles intraday instead of drawing the levels based on high time frames. But beyond that, it's all execution based, right? It's all being able to pull the trigger on an entry, on an exit, and trade execution, like the trade location, is one of the biggest things. Where if you figure out how to enter the trade properly and you're not taking your exits, we still have a problem. You're still not trading well because it goes back to execution. Even if you are executing, your entry's not great, but your understanding of where you're headed is solid, then it gives you that confidence to be able to hold. But it always goes back to the risk management perspective because you can't hold things if you're way over leveraged. You can't take the stress. Or if you can, you don't respect your capital. But if you're properly sized and you're like, oh, it's just law of averages, right? You keep putting them in. If you know what your metrics are, and that can be win rate, that can be profitability per trade. People are motivated by different things, but it has to go back to, for you, how are you motivated? So we're not trading our P&Ls. If you focus on your P&L, that will shrink. I've never met somebody that traded their P&L that was successful. So the quicker you can get away from checking what your account size is by the second, which is what a lot of traders do, the better off you're going to be. So the idea is, I actually know somebody who, and this scares me, I can't do it. This is a little beyond what my comfort zone is. He actually does not look at any dollar amounts in his account. He trades the chart, executes in and out, and then he hands the trade recap to his wife at the end of the day and says, how'd I do, honey? I'm like, okay, I need a little more feedback than that. And he's very successful. It works because A, he knows his wife is going to look at it. And she's not looking at it from a you lost money perspective. You can't be married to a trader and they freak out about that, and you're letting them see your trades. And that will probably bring some honesty. And it kind of depends on the person. But if you think somebody you care about is going to see what you did, you're probably going to make better decisions. And he is consistently profitable. It works. It's something they've developed through the years. They've been doing it for, I think, either 18 or 19 years, a long time. So whatever you need to find that can be your stopgap or your trailing stop, a person, your risk manager, the better off you are. Because one of the biggest faults of being human is impulsivity. And then we add greed onto that, and then we add fear. So we really have to just be, paying attention. And you guys have heard me say this over and over again, but I will repeat until I'm blue in the face. Trading is the truest mirror you will ever look at. It's going to tell you whatever you got a problem with, and you can't hide from it. So if you're struggling with something in trading, there's a chance you need to resolve that in your personal life or your business life, which trading is a business. The difference is we can lie to ourselves in pretty much all scenarios. You can figure out how to lie to yourself through that and justify, I'm use the term bad behavior, but improper responses, however you want to phrase that, but not in trading, because in trading, you either did it or you didn't. You either have more money or you don't. It's real cut and clear. So if you're finding something where you're like, okay, everybody makes mistakes, but if you've done it more than once or twice, it's obviously something going on inside that you need to address before you start putting more money in the market. And maybe that is the first time you've ever really, thought about that being an issue from a personality perspective. But if you like money, figuring out what that brain piece is for you, where that struggle is critical. So I was going to go through some different excuses. We were talking about like you lying to yourself. And I'm just kind of like off the cuff. These are not in any particular order. I think the biggest thing that I see with people after they've had losses, which I call that getting your teeth kicked in, or trips to the spanking machine, those variations. But it's gonna bring you a healthy dose of fear. And a couple episodes ago, I talked about The Gift of Fear. It's actually a book that is not related to trading at all, but it's a beautiful psychology book. Fear keeps you alive. But at a certain point, so much fear doesn't just keep you alive, it keeps you locked in your house because you're scared that everybody's after you, kind of fear. The same thing happens with trading. So you oversize, you've got your TA figured out, but you oversized, and then because you were emotional about it because you had money on a trade, you added more to it to average down, and all of a sudden you've taken a huge loss. And you look back at it after this loss and you go, how come I didn't see that? Like what did I miss? It's clear as day that this was not a long position. But because you've taken such a huge drawdown, oversizing, averaging in more, now there's this fear of being wrong. And so it's like the exact knee-jerk opposite of a lack of respect for capital. I'm so gun shy. And for those of you that have done target shooting or hunting or, whatever that is, when you've got somebody new, they're limp wristing the gun, they're flinching. It's not a confident drive one hand forward into the other hand and exhale and relax into the squeeze. That should be what trading is. It really should not be just a pull the trigger and close your eyes. And I've never really talked about guns and trading before, but honestly, for those of you guys that know, that's it. I have one that I literally, until I learned this, the damn thing would jam every single time. And I'm like, really? I'm a great shot with this other that I've carried for a very long time as a concealed carry permit holder. How come I can't shoot this tiny little caliber? Like, what is wrong? And I was so comfortable in that one thing that I was overconfident. and it was smaller. So I was like, oh, this is easy. I don't have to worry about it. And as soon as I limp wristed, as soon as I was like, oh, it's not heavy, I'm just going to put my hand there, it would jam. Guess what happens to us trading? And we can use the same analogy when I'm working out or working with a client and they'll say, well, what weight should I choose? And I say, well, how heavy's your purse? How heavy's your gym bag? How heavy's your backpack? Because if something we're lifting is equivalent to what you're carrying all day long, we're probably not going to see a change, because we have to have the concept of overload. But then at a certain point, how much more weight do you need? So I'll ask myself, do I need to be deadlifting that much weight? Do I need to be squatting that much weight? While I can, do I need to be? Is the question I ask myself. And the answer is, if I lift a tire that weighs 200 pounds, I lift it with the same mental process as if I were lifting a car off somebody that weighed thousands of pounds. I'm going to put every inch of effort into it, because I don't really, in most circumstances outside of the gym, know how much something weighs, right? You don't know what that's going to be. So there's the training for it, practicing good form, and then there's the execution of it. But they have to be the same. So perfect practice makes perfect, not practice, because bad practice can make not perfect. So if you are using a sim account or a paper account and you're practicing and you get used to seeing these big dollar amounts, and then you go trade a $5,000 account or a 10 grand or whatever, much smaller than what's in your paper, that's how people end up oversizing. They understood without the emotional piece of that, what the risk to reward was, and it's totally fine, no hide in the game, totally good. Once they got used to seeing those positions that were $15,000, they took their $50,000 account and said, well, look how much money I made with $15,000 position sizes. And then it's immediately lost. That's the trade that goes against you 90%. And you added another $5,000 just for giggles, right? Like, ooh, I'm right. And I've been right on that paper account. So that's what creates the fear, is that type of loop that we all get into. And D. Cruz, I'm sure you've been in that kind of situation. And
yeah, absolutely.
Yeah, I mean, it's
in like a constant circle, kind of.
It literally is self-fulfilling. Like, the more scared you are, the worse it gets. And then the more scared you are, it's like, and then all of a sudden one day you wake up and you're like, you can't trade. I cannot, even though this setup, like, had I waited for the setup for the last 2 weeks instead of over trading and blowing my account, this is the perfect setup. And then you can't execute, or you're out of money, or both, or you added money back to the account, but now you're so scared.
Right. Yeah, no, it's whenever you're starting to feel like that, you really have to, take a step back and make sure you're reading the market right, and don't overtrade, because that's whenever, bad gets to worse. So you got to kind of find a rhythm again, and that's all it is. You're in a little slump. It happens with everything.
Yeah.
Even just taking it back to baseball talk and just sports. You're not hot all year, right? You're gonna have those off games, those off weeks that you're just like, okay, well, I'm not as accurate as I usually am. So you got to recognize that, and you have to respect it, and take a little step back and find your rhythm again. And then once you find that, then maybe start scaling back, or if you need to paper trade, go ahead, or just size smaller, one of the two, maybe just not trade at all.
Thinking about baseball,
right
I'm gonna have you tie into that. Okay, so and I've never played baseball. I think a hard thing headed at my head is a really bad idea. Of course, I'll ski and horseback ride, which is much more dangerous, but the logic. So if you are playing, and I have coached athletes that play all types of ball. So if you hit one of those cold streaks where you're just off and you're like, I don't know, like, I clearly have never ever played before.
Yeah.
Do you stop and go, you know what? I'm done. It's over. No, you go back to base one, to square the very first.
You work on your fundamentals.
And you go back to what you were probably skipping. which is what got you in trouble, right? So it's this whole,
Yep.
and that can apply to sales. My background is sales. If you start skipping steps, just because you're good at selling, just because you can create great rapport, you skip steps. It's getting sloppy, getting lazy, whatever term you want to use. So in baseball, you don't stop practicing. You actually go back in, and that's going to be applied to any sport. You go back in
Harder.
and rebuild what's happening. What piece am I missing? And you're like, oh, I just got so
just-
comfortable that I was good with it,
Sorry.
right? No, is that
Yep.
generally? And like I said, I've
Yeah,
coached
no,
a lot of
exactly.
athletes,
And it,
but not in their sport. Mine's
yeah, so like anybody
fiction.
that did play baseball, you know, you could kind of look at it as like, you know, you start whenever you get in a slump, or just any sport, whenever you start, you know, not doing well, you go back to you go back to square one, you know, you go back to a tee, right? And that's literally like the first thing you've ever hit off of is a tee, right? And
Yep.
it's like you know, 6 years old.
I
5
have
years
played
old,
that.
and you
Okay.
go back to that. Yep. Right. And you
The
do
ball is
that, and, you know,
down
and
and
then you
moving away
just
from me.
get your reps in, and then once you get your reps in, you're going to get your confidence back, and then you take that to the field, right? AKA a trade, you know.
Which is when
So
you're
you
on a
gotta
losing
practice.
streak and you've been doing 5% and okay with it. And then all of a sudden you're like, wow, I've had 5 losses in a row, even though I'm not oversized. There's a little exclamation point that should be popping up above your head of like, I might not be seeing this well. Going back to practice T-ball is now I'm going to scale this down. It's taking 0.5%, a starter position, maybe 1%, much smaller, to rebuild that confidence. It's exactly the same thing. We just tend to kind of, I think, take ourselves into one particular area of our life and not apply those other life lessons. So some different ways you can really identify if it's fear. And the fear sometimes can come for somebody who has never traded before, and the first time they see anything red on their screen, they just train wreck all the way through what we're talking about, which are the extreme opposites. But things you want to be looking out for, and this is internal dialogue. You're probably not telling other people this. This is a thought process. I'm afraid of failing. I don't want to be wrong. I don't want to be embarrassed and humiliated. What if it doesn't work? Oh, many others have tried this. Like traders just don't, they just lose money. Yeah. I'm scared. I'm uncomfortable. And if I feel that, I just think in my gut, this is wrong. And then things like, is this a guaranteed way to make money? Those are all signs to me that maybe you're not ready to be trading real money, or that you're not educated enough in the areas that need to be educated. So that's the TA and the sim trading, the paper trading. If you haven't established what your edge is,
Practice makes perfect.
right? If you haven't defined that, you should be scared. You should actually be
And just jump
terrified,
right in.
right? And if you're
If you've
not,
never
then
played baseball, can you just pick
Oh,
up a bat and
like-
go
like-
bat?
like I'm saying,
get a base hit?
fastball headed from my
Yeah,
face.
any
It should
sport.
be
Any
terrified.
sport.
Things like I'm embarrassed to tell my family because what if I fail at it and then they judge me? I'm trying to think what else.
Just grind in silence. You don't got to tell anybody.
Right, right. So some of it has to do with what our thoughts are about what other people are going to think about us. And so there's the flip side of what I was talking about. Like this guy hands his literal, trade record and lets his wife see the balance. He doesn't even look at it. The polar opposite of that is you're so embarrassed to show them because of your losses that then it's a self-fulfilling prophecy. You don't show them, so then it's worse and you're trying to dig yourself out of the hole. So there's so many different levels that the fear factor can come in. And so we really have to kind of step up and stop fooling ourselves as far as where we are, what we're capable of. You cannot come into trading and be wildly successful immediately. And maybe there is somebody out there that's done it. I have never heard of them. Definitely never met them. So if you guys know somebody, I'm all about, like, let's talk if somebody has. It is the hardest thing you'll ever do. So you should be terrified at the beginning until you're educated. So that fear keeps you safe at the beginning. It keeps other people out, and you have to decide for you, do you have the risk tolerance or the threshold of thinking, all right, well, if I made $10,000 and then I gave back 1,000 just to test and see if my theory was still true, you still made $9,000. We're not focused on the $1,000 that you lost. And yes, if we could eliminate all of our losses, we would. You made $9,000. That's what matters. So a lot of times spouses, if, they like look at stuff and they're like, but you lost $1,000. And you're like, but I made 9,000. Who gives a shit? Like, I don't care. So you have to set yourself up right in what you're using for accountability so that it doesn't end up sabotaging you. And it has to start with you. And then as you educate yourself, as you learn what your thresholds are, and you want to bring a spouse into it or something along those lines, this actually happened to me where I was doing well, but my husband's fears about it interfered in my, all of it. It threw me off. And we've been married a long time, got married really young. So, there's a lot of we're best friends. We've been together forever. And so his fear bled into me, and then I was not executing well. And I'm like, what in the heck is happening? So for me, it was not good to have that, because he'd be like, you lost $50? Well, why didn't you cut it earlier? I'm like, 50? Really? Really? And this was years and years ago, of course. But for me, I actually had to stop sharing what that was and just give a month end, like, here's how much money we made this month. And then it was totally fine. And then he stopped asking, because I'm like, nope, we're not talking about this. Sorry. Not healthy for a relationship. Definitely unhealthy for a bank account for me to have performance anxiety from you, not from me. Oh, this doesn't work. So that was a good thing for us from a relationship perspective, is to identify that was a problem and it had to be eliminated. So you either trust me to execute what I'm going to do, or you don't. And those are our two choices. You cannot be sitting behind me watching every single buy and sell, because I will die, or you will die. One of the two of us. It's not going to work.
Oh yeah, my girlfriend. I mean, she's allowed in here, but she's never really like around me.
Yeah.
It's just like,
I'm like, your desk can face the other way. You can be in here with me, totally good with that, but you're not sitting here like scrutinizing everything. What are you doing? Stop.
Yep. Like actually today I was down on a futures account, $600, and I did take another trade. I just waited for a more solid one with a tight stop, and I'm back down to 100, 100 even, 100 to break even. So
yeah,
one more solid setup, and So, but if you tell them like, hey, there's a 700, limit, and then this gets auto liquidated, they're gonna be sitting there like, what are you doing?
You can see the smoke, right?
And then like after, it's just kind of like, well, this is why, like, it's like, now I'm reading the market, right? But it's just like something you can't really explain to somebody that doesn't trade themselves.
Yep. So your two choices are to teach them after you learn, or to just have that be, if you work as a scientist somewhere, do you come home and give your spouse a play-by-play of every single analysis you did today and every single thing? You do not.
Or just the good parts. You're probably just the good parts.
Yeah. And it's really, it's work. It is what it is.
Right.
Yeah. So those risk tolerances are very different partner to partner. And I'd say most of the time they're opposite. They're not just very different. So somebody that can trade, their spouse is probably not going to, the reason it's a good relationship is they're going to be balancing each other out, instead of the same two, maybe high energy, I don't know, whatever, right? More determined personalities, then there's conflict. Most of the time, not all the time. Right. So I think if we're talking about fear, we can kind of meld that into understanding the risk. And you guys hear me say this all the time. We're not focused on how much we're going to make. We're focused on how much you could lose. So if you're not assessing what your risk is, if you're just seeing dollar signs, you're just like, I can take this 10 grand and it could be 20 grand at the end of the month. You're not focused from a risk perspective on what's going to, oops, hold on just a sec. if you're just focused on the gain piece of it, that's improper risk assessment, because you're not paying attention to what the critical piece is, that if you lose half of that, you now don't have $10,000, you've got 5,000.
Yeah, it can't be tunnel vision.
Yeah.
Yep. You gotta accept that you're wrong, you know, about 30% of the time on average, 30 to 40%, right? So
Well, and you
have
can
to
even
accept
be
the losers
50.
and have the same risk.
Yeah, 50
Yeah.
is a really, really
And you
common
can still make
metric,
money. With it. Yeah.
because you're not adding to losers, you're not letting them go to zero, and you're not so scared by the losers that then you're taking a 10% profit and a 50% loser. You can't do that. Not with a 50% win rate. You really probably can't even do that. I'd have to sit down and look at one of those graphs. Even with a 70% win rate, you still have to make sure that you are solid enough in your TA, and your risk assessment is such that you have not over leveraged to allow the trade to actually play out, unless something has changed categorically in relation to the context. So if the context has changed, that's different. And I think one of the biggest ways, oh, go ahead.
Or yeah, just add on to kind of just accept the win rate, like just once you start trading and getting in depth with journaling and know about where you're at, and you have a comfortable strategy and you iron things out. I mean, just accept the same risk or reward per trade basically, and then you take 10 trades, you have $100 stop loss, $100 profit target, you're gonna make $700.
Right.
Like you gotta look at it like that. Like it's just you gotta respect that those three losses though, however, or that could turn to you make $500, you make $300, you're break even. It just depends how greedy you are. So if you manage that same respect per capital both ways, profit target and stop loss, it's actually really hard to
It's really hard to mess up. Exactly.
and
Really
yeah,
hard.
it's that's the thing, and you just got to find your strategy, find that comfortability with that, start executing properly, and keep your risk and your risk management and your reward targets all tight. And that's how you become a successful trader, and you just constantly do it and you do it and you keep ironing out the bads, and then you have better weeks than others and you have worse weeks than others, right? But it all irons out. So
Well, we could think about
you
it
just got to
like
stay
being in
consistent.
food service. So you've got a special that, that's the Friday night special or the weekend special. And so from Sysco, you've ordered the particular ingredients that it takes. So let's call this I don't know, like we'll do like surf and turf. So normally don't have a filet on the menu, but the special this weekend is a filet with a lobster tail. Since it's not regularly on the menu, you might have an idea of, how many people are going to order a filet, but you don't know how many people are going to add on that lobster tail. So you don't go, this is going to be such a big hit. Now, if you've done it repeatedly and they know about it, this could be a different scenario. But if you're just introducing the surf and turf, you're just adding a lobster tail to your regular filet, you have an understanding of how many people on a Friday night are ordering a filet for, let's call it 16 weeks rolling average. Seasonally, that happens more during these months than it does these months. People shift into other dishes. So you know that as a metric, as a business owner. So you don't go, the amount of money I make on a lobster tail is crazy, right? It's crazy. I'm just going to order more because they'll just sell. Because if you don't have more people buying steaks than you normally do, you're probably not going to have more people buying surf and turf, because it's pretty much the same crowd. So if you bought too many lobster tails, you cost yourself money. It's a cost of doing business. You don't not buy them, but you go a limited amount, which is why sometimes you'll order the special and it'll be like, oh, nope, sorry, we're out of that one, because they limited their risk. They knew how many steaks were likely to be sold from this time to this time, and they calculated their risk of not overbuying when they can't turn the product around. It's the same exact thing. And what you said, I was actually going to talk about just checking in with yourself, that actual ask yourself, what are you doing? Is what I'm doing in my best interest? And if you want to write a Post-it note out of today, that's your Post-it note. Is what I'm doing in my best interest? when you enter a trade, while you're in a trade, and as you exit a trade. That simple question will probably save you more money than you could ever possibly imagine. It was a critical turning point for me because my focus was always on how much I could make, not how much I could lose. And the next one will be better. The next one, I'll do better. The next account that I fund, the next whatever that is, it'll be better. If what I'm doing right now in this trade is not in my best interest, we have a problem. And if you can't say yes, entry, during, and exit, well, if you're in it, you should get out. You should just immediately flatten the positions and just be done. And be like, okay, obviously my vision is clouded or whatever that is, because it's for me. It's not for anyone else. It's for me to prove to myself, to build up that confidence so that hopefully if you've decided you want to go full-time trading or add it as your side job and keep doing your regular day job and have your side gig be more profitable than your day job, okay. If what you're doing is not in your best interest, that is never going to happen. It just won't. So your trading accounts are actually going to tell you if you're lying to yourself. And there's all kinds of excuses that we use, and we definitely just, kind of scratch the surface on what that is. I do have a book inside the Trading Psychology channel that is not a trading book, but might be helpful. Let me find it. It was a while back that I posted it. Okay, there it is. I posted it April 7th of 23. The title of the book is Don't Bullshit Yourself. Crush the excuses that are holding you back. And so there is a PDF that you can download and actually read, or you can go on Amazon and buy it. So I'm going to link that inside Market Talk. And then I'll just go ahead and reply to it inside the Psychology Risk Management channel. Because if you are finding yourself using excuses, this is probably one of the better books for you to read. Okay, I'm going to go ahead and wrap up the audio unless you have something else to add.
Yeah, no, that's well said, everything. But, yeah, if anybody else has any questions, of course, feel free to ask us in Market Talk or just wherever, DMs if you just ask it openly, but just just know that we've all had these questions, so don't feel like so feel free to ask any question.
Yeah, the questions, you guys, they really help us actually formulate what we're going to talk about.
Pinpoint our discussions, yeah.
Yeah. And I try to come in with, some kind of concept of what to talk about if there haven't been questions. And sometimes it'll just be in response to what I'm seeing if there's not questions. And I know that eCruise really, really tunes in with that as well. But sometimes it's just, things seem to be going well or not well. And I'm seeing people shorting this uptrend market and finally paid this afternoon, finally. But if you've been shorting for 3 weeks and you just now got paid today, getting paid today, what's your excuse to not have been paid the other days that we're trading the other direction? It really just is that, dig in kind of concept. So I'm posting it right now, and I'll post the replay in just a little bit, and I will catch you. Looks like my husband and brother-in-law just drove up, so I catch you guys in about a half an hour.
Sounds good. Have a good one. Talk to you soon.
See you later. And it's nice to, I think, have these, because we're on voice pretty much all day long together, but where they're more targeted. So if that helps you guys, Cruz and I will just talk to each other all the time because we get along well, but like if it helps, please let us know.